the week ahead. This session is going to be slightly longer than you are accustomed to, but it's important to understand the background against which the current market is trading. If you look at the daily bar, you will see that the market mechanically went higher for a substantial period of time and almost perfectly fit a trend line. When a market almost perfectly fits a trend line, that's usually an indication that it is being driven higher by weak hands, laggard momentum traders. They're buying exact price levels. That is not the action of longer term money. Markets get too high and the markets get too long. Very often it takes some kind of catalyst in order to break that movement to the upside. In a previous report, we thought that the catalyst was rhetoric coming from the Republican side of the political scene. Since that, there has, of course, been some changes, but that did start the market on the downside. So the first thing we had was a gap. Those that are familiar with what we do, gaps are extremely important. Gaps, and we only measure gaps from the low of the previous day, not from the settle, which makes gaps more significant. A gap is a sign of change. Without change, there is no real opportunity in the market. So the market broke to the downside. And as you can see, the ultimate lower support level is the gap that would be filled at the 53.84 level. We're close to it, and we're just right above it, but I don't know if we make that or not, but that's what we're looking at. So the short-term trend is currently to the downside. And the market is now, we enter next week with a 3-day balance. This 3-day balance is what I call balance within balance. Let's take a look at this balance within balance via the market profile. Balance within balance is probably my favorite view of the market. It's an indication that change is about to occur. We don't know how soon, and you have to be patient. But balance within balance is also telling us that the market wants more information before it makes its next directional auction move. That is consistent with events from the following week. On Wednesday, we have the July Fed meeting, or FOMC release, followed by the chairman's press conference at the end of the session. Probably unlikely that there will be a rate change in July. More than likely it would be September if there's to be one. However, the market will be closely focused on the chairman's words at that press conference. Then, following that press conference, on Friday, we have the monthly jobs report. And we're in an interesting area. Yes, inflation has come down, but the market is questioning now, did inflation come down because the market has softened too much? So both what the Fed chairman has to say, as well as the monthly jobs report on Friday, should add some volatility to the current market. So we enter the week with a 3-day balance, or balance within balance. The important thing for you to do is to have patience and be prepared to go with a breakout from that balance. Have a great week. Wish you well.